And let's look a bit about the Fed rate probability. Right over here, we currently have a 99.2% probability that we're going to see a 25 basis point rate hike come July 26. So more or less, you can't have 100%, but more or less you can say very safe to say that, we are probably going to see a rate hike already going to happen. Now, according to Reuters poll, they did a poll, and majority of economists is saying it would be the last increase in this rate hike cycle. This one is going to be the last one. So this is a quite, how do I put it, a very interesting development, because if it's the last one, there will be a lot of changes in the structures right after this, right? So if we look at this, personally, I think it's very easy, to say like that it will be the last one. But if the inflation data that we're going to see, if they cool down further than what they did last month, then that probability is high. So we don't need to wait that long, as we would be having the core PCE price index by the end of the week, like I mentioned just now. So from there, indeed, we will be able to guess, whether inflation is really coming down or not. Because if you strip away the volatile part of oil and food, and if you still have inflation moving up, then that's not a good thing, right? So we will see that particular thing. And then the next is, I think, there are also developments. You just can't believe everything what you read, but at the end of the day, those people that is directly involved in ensuring the rates, whether it's going up, going down, I think it's important to listen what they are saying. Now, you have Tom Barkin, who is the president of the Federal Reserve Bank in Richmond, and Neel Kashkari, president of the Federal Reserve Bank in Minneapolis. They are basically telling they're not too keen to pull the plug on rate hikes at the moment, even though polls are telling, are telling that, this could be the last hike. Everybody's thinking that. So, but basically they are thinking, they are a bit cautioned. They have cautioned all the members to be, you have to be careful and not to repeat the mistakes that they did in the past, like early in the year, in December, when they found that inflation is actually slowing down. What they did was actually to reduce the rate hike momentum, so only to see inflation rearing its ugly head again 2 months later. So they do not want to repeat this mistake again, especially when you're at the tail end and you don't have much room to hike rates anymore, and further rate hikes could actually damage the economy in a very bad way. So this is something that they have to be very, very careful. Hence, they are citing caution on this. Okay, so we'll look at the inflation data, and from there, I think we can have better educated guesses, where, what's the probability rate hikes going to happen, further rate hikes. Next is the ECB rate hike probability. So when the US is talking about a potential last hike, right, there was no such thing for the European Central Bank. So in the last meeting, the ECB policy makers said that the ECB will continue raising its rates beyond this month to bring inflation back to the target, which is 2%. Now, the current 4% level for interest is already the highest level in 22 years. And statements like this, gives us a very clear indication that they're probably going to continue rate high. The ECB policymakers released a statement. They said it was seen as essential to communicate that monetary policy has still more ground to cover to bring inflation back to target in a timely manner. Now, statements like this, I think, is very, very clear cut. It shows more rate hikes is to come. reports have shown that the ECB is only expecting to cut its rates in the first half of 2024. And not only that, I think a lot of central banks will be doing the same thing. Hence, I think it's safe to say that 2024 would be the year of rate cuts. Okay? So let's move going forward. I think you monitor the core prices, especially services. Services in the Europe is important to check on. From there, we can gauge the inflation, the overall inflation from let it come out, and then we have a look see, and from there we'll be we will have an idea whether, you know, come September the ECB will be hiking its rates and by what degree. Okay. And finally, the Bank of Japan rate hike probability. Japan consumer prices rose at a faster pace in June, staying above the central bank's target for the 15th consecutive month. That is quite some time already, especially for Japan. Now, the core CPI year to year hit 3.3% last month and up 0.1% from the previous month. For now, I think the Bank of Japan is widely expected to keep the benchmark rate unchanged at negative 0.1%, sticking to an ultra-loose monetary policy state. As other central banks, you know, has been hiking rates, they are the only one maintaining it. Now, we understand that the one of the reasons why they are not actually hiking its rate is because the inflation, if you compare it to countries like the UK to US, it is much less severe. Okay, so that's the reason why I think, you know, they may not do any changes. But if we have the core CPI for Japan coming in as showing that inflation is not showing any signs of slowing like the other leading economies are, then things could change. Okay, the BOJ might potentially say something, have something to say about it. So this is something that's why I said brought it up. But if you look at the BOJ core CPI news, right? If you look under Forex Factory, it's categorized under yellow factory. So it's not something important. But to me personally, I think it's important because it gives you an idea how the BOJ might act next. Because once the BOJ act, you know, they move, they are not small. Okay, but if they don't act, it's also a good thing, because then we will have a clearer idea where the dollar yen is actually moving to. In a short while later, when I talk about the charts, I will discuss more about that. Okay.